Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Well, good morning, good afternoon. Welcome to Develop Your Edge with Anthony Crudele. I'm your co-host, Tom Schneider, CMT with NinjaTrader. And we don't have to do the disclaimer. This is great. It's great to be back here with Anthony. And with that, I just want to welcome Anthony onto the screen. How you doing, Anthony?
I'm doing great, Tom. Perfect time for a show today because I've actually got my Trade-of-8 screen up here as well, which everyone should know is part of NinjaTrader. And I'm actually potentially going to be doing a live trading crude oil if we get a setup, and because we're going to be talking about crude oil, how I use Bollinger Bands, Fibonacci retracements. We're going to use some order flow, cumulative delta, and I'm going to use an RSI for day trading crude oil.
Well, this is amazing. I mean, this is, I when I heard the subject, when you told me what you wanted to talk about, I thought this is great because this is really putting it all together, right? Putting different tools together to help inform you as to, is this a good time to get into the market and express an opinion? So I'm, when I saw that, I was really happy to see that, and I think it's going to be a great show.
Yeah, and I think we jump right into it because I actually have a ton to talk about today. I'm actually going to go over my E-mini S&P daily chart as well, because I have a swing position out in the E-mini S&P that got triggered this morning, and it's all based on everything that I discussed in this show each and every week in Develop Your Edge. So today we're going to start off with the basics. All right, let's pull up the screen and let's go over just some simple settings that everyone has to know before we go to the charts. I always think it's important before we go over any trade example that you understand the why. I'm not hiding anything behind the scenes. We're not doing anything that's creative behind the scenes and showing you only a portion of it. I want you to know exactly the why. And I feel that that's really important because any trade setup that you look at or any strategy type of, something that somebody puts together and you like it and it resonates with you, you have to understand how it's developed. And so I put together a PDF. You can get this at anthonycrudele.com. You could also click the link in the YouTube channel and go and download it. Each and every week on Develop Your Edge, you can go and download these chart decks, we call them. It's free. You log into my website, you get some additional videos and some other stuff, and you could download it. So the first thing that we're going to look at is Bollinger Band settings. If you've watched me at all ever on social media, you know that I love Bollinger Bands. And my Bollinger Band settings for when I'm day trading are a daily, an hourly, and a 3-minute. And they all feed down to the 3-minute. If it gets really busy, it's not listed on here. I'll go to a 1-minute. But that's, once again, only during very volatile times. But most of the time I'm using the 3-minute. And then we also have fib retracements. I talk about 0, 30, 50, 70, and 100. Those are what I use. So they're really not fib retracements. We just use the fib tool because, the fib's 382, 618, and, all the other ones. I don't use those standard ones. And then I just use cumulative delta and RSI, and I'll show you what those are. And the reason for this, why I look at this is really, I like crude oil for this a lot right now, specifically because of this market environment, because it boxes in vol, right? It boxes in the volatility. And we're going to show you how I draw fib from the top and the bottom of the Bollinger Band peaks, how I start with the daily, work my way down. And when I get to the 3-minute, I'll show you an actionable trade. And possibly right now, as crude oil was rallying, I was actually looking for a possible short if it does trigger. Like I said, we wait for the Bollinger Bands to make the peaks. We're actually making a 3-minute peak right now on NinjaTrader. I was watching that, and so we're pretty close to that, and maybe we get to that, get an opportunity to see how a trade works out. And also cumulative delta, just so when I go in there, you understand what it is. It's just showing me the delta The delta is the difference between what was bought in the offer, sold on the bid. As the market's going up, are they buying more offers versus selling bids? And although it may seem like, oh, well, crude oil is going up today, the delta should be positive. Not always. Because what will happen is if we go up and it sits there, there might be a lot of people hitting the bid and the market's absorbing it. And there might be more sellers hitting bid than offers. And I like to see that relative to the also to the RSI and where we are in the Bollinger Bands, because the volume delta helps you make an in-the-moment decision of what's happening. Are they buying a bunch of offers all of a sudden at resistance and it can't get through it on an up move? All of a sudden, maybe the sellers have now absorbed the buying and vice versa to the downside. So cumulative delta is great for that. And so that's it. Once again, you could download this document on anthonycrudele.com. Next thing I want to do is I want to pull up. So here we are. And actually, we are actually going to get a setup in CL. And it's actually happening right now, but I don't want to jump the gun and just start shorting crude without explaining you the whole reason why I'm doing it. So let's quickly go through the daily chart. First thing is, when you look at what's happening in crude oil right now, look at these Bollinger Bands. Could they be any flatter, right? They're doing nothing. And that just tells us that what? Crude oil is coiling. It's directionless, right? When Bollinger Bands are opening up, the market is going in that direction. If you go back and look at here, when the market's going down in crude oil, you could see the mouth was opening. And then when it started to come back in and consolidate, you could see we got it into consolidation, right? And you could even go back further in crude oil and daily and see anytime we're going up or down with a move, the Bollinger Bands are making peaks. But when they're just sitting here sideways, it tells us that crude oil is just doing nothing. It's doing nothing. Right? In terms of trend, there is no real trend. And you can go back and look at just price comparison from where we were in March to where we are now. We're almost at the same prices. Okay. So there's just no trend. And this is why I really like this strategy, because this strategy is a mean reversion strategy, right? Next thing you know, we're going to go to a 60-minute. Now, the 60-minute is actually the key to this. And the reason why the 60-minute is the key is because the 60-minute time frame really sets the tone for my direction when you have a daily that doesn't have direction, right? So when you have a longer term time frame that doesn't give you a direction, that medium term time frame is going to be what sets the tone. So if the daily was opening up and the Bollinger Bands were open and we were going straight up, I'd be like, okay, it's obvious, right? You can see where we are. But when you have a 60-minute that is like that medium time frame, it helps you set the tone for what the direction could be. And so what I did here is, number one, you have the cumulative delta, you have the RSI, you have the Bollinger Bands. The Bollinger Band settings are 20 period, 3 standard deviation, and I have my Fibonacci tool. And what I did was, you could just hit F8 on Ninja, I believe it's F8, and you click it, and you could draw it from peak to peak. And what I look at is this. See how I have this area in red and it's shaded? That tells me in this area is the areas I want to be short. 69, 63 was resistance. Apparently it didn't work too well in this area. But once again, every support and resistance eventually gets taken out. And this morning you could see we're pushing higher. And so now that we're above this area, it tells me in the short term that we've pushed above resistance, which 69, 63 now becomes support. And the upside resistance is 71.14. So the top of the peak of the Bollinger Band now becomes resistance. Because anytime we get within this 30%, I've talked about this before, this is what I would consider unfinished business. So when the market was moving down here, it tried to go lower, it couldn't, it's coming back up. It drew these Bollinger Bands, so the market drew these Bollinger Bands based upon the volatility. And when I look at these tools, I say if it holds within this 30% area on a blip higher, that's where I want to look for resistance. And in the short term, in this area, if we're violating the Bollinger Band, or if I see overbought conditions potentially on my 3-minute, I might look for a quick rotation lower. So understand right now, the setup is I could be slightly bearish, a little bit of a look as we start to getting near 71.14. That's where I would be aggressive. If we're in the middle here and I were to get a short-term short, I could probably dip my toe in the water a little bit and maybe look for a little bit of a rotation back down, because we're getting a little bit potentially overbought on the RSI, on the 60-minute, and we're above the Bollinger Band. So it kind of gives me that sense of, okay, the market's really still a two-way market. don't step in front of a freight train here with any sort of aggressiveness unless it gets up to 71.14, but you could step in and maybe look for a little rotational short on the short term. Now, if we got a long and any sort of a pullback, I would look for a pullback and I would buy anything around 69.63. So that's my boxed in area on the 60-minute. Now we get to the 3-minute. And so I want to hit my F8 button and I'm going to draw a line. So basically right when the peak hits up to the peak here, okay? So now you have this scenario where we have, remember I told you that shaded area, that's where I boxed in and want to be short. And so when you look at the market right now in crude oil, okay, crude oil is telling us, or on my stuff, it's showing with this Fibonacci retracement, 70.41 is an area to potentially look to be short if it stays below there, okay? And the target would be 69.98, would actually go back to that area that we talked about, relatively close to that 69.63. Then you would get down to the 70% would be my target 2. So target 1, target 2. But what did I say? I said, because I have an upward area of around 71.14, I can't get super aggressive here. And so, I mean, maybe we bring Tom in here while we have this, because I want to go over actually some stuff. I'm actually going to show you how I would execute. This is live here. And I pulled up the micro crude oil because I'm going to talk to a lot of you. I think that most of you are obviously newer traders or retail traders. And crude oil can be a pretty expensive market to trade, not only for the margins, but for the tick and the volatility. So regular crude oil is $10 a tick. Micro crude oil is $1 a tick. And so it's just 1/10 the size. And I'm going to show you today using micro crude oil, although I do most of the time trade the bigger crude oil. But for the example, I want to show you, and I want to try and maybe get in with a few contracts here and show you exactly how I would do it. So Tom, I think maybe if we get you back in, maybe we talk about a couple of things, and maybe if we start to get below 70.41, I show how I'd execute it.
Right. So, great explanation. And I like the way you use what we call fractal analysis, going from the daily to the 60 to the 3-minute. Like what I started to see when you were doing that was a certain paradigm for the daily, right? And then sideways. Okay. Nothing really happening. You drill down and I saw a little bit of divergence with the cumulative delta. We didn't really talk about it. We were talking about the upside, Bollinger Band potential of the upside. But what I did notice, there was a little bit of, as that market was creeping up, we saw cumulative delta coming down. It's really evident on this 3-minute chart where you have sideways action, and that cumulative delta is just, that to me is a divergent activity that's also reflected with the RSI. You have two indicators right there that are saying maybe this market isn't as strong as it is, at least on the 3-minute chart. And
I'm going to tell you that is true, but this is also a reason why of what I'm saying right now, why I'm not shorting it. And so let's go over this, because this is actually a perfect example of when somebody would learn a strategy and then would just jump in because, oh, Deli said at the 30% I want to be short, look at staying below it. Here's what's really interesting, right? You get an overbought RSI on a big green candle up in cumulative delta. That means buying came in, we got overbought, right? Everyone understands that. Overbought RSI and the cumulative delta came in very strong. Then you see sellers coming in, hitting bids. And if I'm short in this area, I'm going, man, they're not making any progress. You always have to look at the volume relative to price. This is why I use cumulative delta here. If the sellers are coming in and they're not pushing below my area, why do I want to be a part of it? That means that I'm getting caught trapped in a short because I'm selling into bids that are holding. So what does this mean? It means that when the cumulative delta is going down and you're not pushing through resistance or below resistance, which it is very minimally, you've got some rotations. Remember I said it could be quick scalps. That's about all you're going to get because of the 60-minute is superseding this bias. The bids are firming up in here and you can see it. They're not buying the offers, but they're working the bid because they're saying, look it, we might still go higher here, but I'm not going to just lift the offer. I'm going to work the bid. And everybody sees that the market stops rotating higher and then boom, 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 cumulative delta shows that they're selling the bid, but you can't rotate lower. You can't get below it. So what I look for when this scenario is, so here's something that I'll do, and this is something I'll do as a tester, right? I'll work 1 at 70.41, right? And I'll put it in. That's my line. I'll work it. Okay, I'm filled. Let's watch it. Rotating a little bit higher now, right? I'm in 1 micro. No big deal. My position on this, let's just say I'll get up to, let's just to make it easy for everybody, we'll say that I'll get up to 5, okay? And if I look at this, I'll say to myself, okay, I'll step in 1. I'll get up to 5. Where's my stop? Well, I'm selling 70.41s. My first target's going to be 69.98. The trend is up. I'm probably going to step in to buy that a little bit. I've got around 40 cents of profit potential here. So in this type of an environment, I see the high is 60 cents. I look at it and go, I'll work 1 buy stop for a 20-cent risk to potentially make 40 cents. And I'm just in now. I got my 1 short. I got my 1 stop, and I'm watching. Okay, they're coming down again. What I'll do is I'll wait to see, is Delta growing lower? It is. Okay, let's work the offer. And what I do is I don't get in a hurry. I don't want to shrink my opportunity, right? So what I want to do is I'll work like a 37. I'll say maybe on a bounce up. And I'll also say, look, I was risking 20 cents. So if it comes down to 70.21, I got 1-to-1 equal risk versus reward. And if I see that they come down here and this Delta is hammering it, and can't go lower, I might just puke it, right? And so I'll look at it and say, maybe they don't go all the way and give me my target. But if they give me what I'm willing to risk, I'll take a 1-to-1 scalp against the grain because I'm going against 60-minute. So I don't need to be crazy aggressive here. And sometimes I'll look at it and go, look at Delta's hammering it again. They're going lower low in the Delta, and you can't even make a lower low. It's crazy, right? You're like, why could this thing not go lower? And so then what I'll do is I'll say, okay, you know what? Let me work the bid. Boom, I get filled. So I make 20 cents on it. And I say to myself, okay, right? Now, if I have multiple contracts on, I would have just bought 1 back. But instead, I just did 1-to-1, right? And I said, okay, I took a small scalp, pull my offer, exit all, cancel, wait to see what happens again. Maybe I get a rotation up. Maybe I see what happens from there. I start to work the offer again, right? If we start to blip down to 69.98, let's go back to the 60-minute, okay? Here's the 60-minute. What did I say support is? 69.63 on an upward trending day. Let's see what happens on the 3-minute. Well, look, it's 69.56 is now my support, okay? So I say to myself, that's where the opportunity might be a little bit juicier. Maybe we see the sellers come in, get trapped into this area, and I step in for a long. So you got to sit back and wait and be patient. And as you can see, the market's rotating lower. I could have held the trade, coulda, woulda, shoulda on everything. If I have multiple contracts, I get out, and I'm doing this live, so I'm trying to, be conscious of all of that. And look at now the first target would eventually been hit. And I will tell you this, see how the Delta now is accelerating to the downside? Okay. And we're making a lower low than we did here. The bids are starting to remove themselves a little bit. And so now they're getting a little bit nervous. So maybe you've got some guys that have been working bids in here, potentially get a squeeze back down to support. And I'd love to see a squeeze down to 69.56. And that's right, step in because that's around my 60-minute level. And I've got it coinciding with my 3-minute. This middle area, I really don't want to step in and do too much in here. I want to buy on the 70 or I want to sell on the 30%. I don't like doing too much in the middle because in the middle, it could go down to 69.56 and I could still be right being long. So hopefully that explained just in that little scalp that I did.
Yeah, I think that really makes sense when, what you're seeing, we look at divergence and, what is the market really telling us is what you were saying, right? Can't make new lows, can't get past this lows. We've got cumulative delta going down. We've got RSI going down, yet those lows were holding for so long. And I say that relatively speaking, right? 3-minute chart, you're talking about an hour's worth of time in real time. But for so many bars, we couldn't get past that low of, let's say, 70.26, 70.27, where we are now. And actually, we've just come back to that level that was support for so long.
And look at this right here, too. What did I say? They come up short of the 50% line, right? Because this target, remember I said they could go down there and get it, but you can see that the selling is coming in aggressively and the bears are making very little progress. The bids, they got a little flustered there. Now they're coming back in and they're buying some of that delta back again. The bottom line is when you're going against the grain from the 60-minute, if you could get a 1-to-1, 1.5-to-1, maybe a 2-to-1. If I would have I don't even think I got down to 70. I think the low in that bar was like 70.04 or 70.05, whatever it was. But the point of it is that, you can't get greedy on a target when you're going against the grain. You got to look at it and say, I wait to work the offer after. I'm not selling the whole time, that this red line is there. It gets below my price, I work the offer. Let the market fill you. Feel what it's like to get in. If it gets back up to 70.41, I'm not just going, I'm going to sell a bunch here. I don't do that. It gets up there because it might go up to 70.45, 50 bid. And all of a sudden I'm going, well, great. I just sold 41s because I just stood there short. I don't want to do that. I want to wait and see what the response is. I want to watch the volume. You've got to make calculated moves as a trader, because anytime you jump in, you're always first in. A lot of times is wrong. And it's because you're in too aggressive too early, and then you can't hold it. But if you wait, like I showed you there, you wait for that scenario, it gets to 41, you work the offer, you work one. Now, mind you, I would have loved to get up to 5. I wasn't able to, but I made a quick little scalp, and it was what I wanted to do, right? And that's what trading is. It's not just all in, all out, all the time. You've got to learn to have that rhythm. I believe so much in that rhythm. When I'm too aggressive, too quick in anything, and I'm not respecting what's happening in the moment, that's when I get chopped up.
Well, and you made a good point about getting short at, let's say, 70.41 as your example. There's new information since you made that level distinction, right? Since you said, okay, that might have been a good place 5 minutes ago, 10 minutes ago, 15 minutes ago. But if the market gets down to 70 and then comes back, that's a new dynamic. There's new, it's kind of like the battleground shifts a little, right? And so 70.41 5 minutes ago is different than 70.41 now. So to speak.
Exactly. And look what's happening right now is that this delta keeps coming into the sell side, and the market is not really getting much lower. That is a sign to me. You really got to be wary of being short, because the market keeps hitting, the sellers keep coming in. And until if they start staying below 70.41, which they have been for now, and they push below 69.98, then you maybe see a blip down to that 69.56 area, because then maybe the buyers are like, oh man, we've been absorbing this and we're just wrong now. But if it starts to creep up here with delta really negative, that's a concern, because all of a sudden these people that have been hitting the bid might squeeze this puppy right up to 71.04, 71.14, as I talked about in the 60-minute. And then what do I do? So in that scenario, something important to talk about here. If the market were to blip up right now, in the next 5 minutes with the Bollinger Band staying there, let's just say it was a dead green candle right up to 71.04, I'd watch that delta to see if there was a puke. And if it stayed below 71.04, I'd start to work the offer and I'd get a little bit short. But if this top Bollinger Band gets above this previous peak, I won't touch it, because that means we're expanding again. What do I mean by that? Let me pull up a horizontal line right here. Look at what happened right here. So you see this peak right here in this Bollinger Band? You see right here, if the market would have touched this price at 70.20, I would have sold it, because it would have been above the Bollinger Band at the moment. But the minute that the top Bollinger Band gets above the previous peak, we're expanding. See how it makes the high right here? Everybody see that? And then when the peak comes back in, now you can short, or now you wait for the long. Now we're boxed in. You don't sell previous peaks when Bollinger Bands are expanding volatility. I tell you what, there's a real dogfight going on here in crude oil, because these sellers are relentless. And I tell you what, if they keep going up to 70.41 and holding, I keep rotating in, working the offer short. If they start squeezing above 70.41, my stop's a little bit tight. I won't get greedy with it. And I'll tell you, if you see a blip down to 69.56, and maybe you see the market really kind of get exhausted short and they can't push through it, then I think you could see a squeeze off of there.
Right. And that's right. If we see that sellers are getting exhausted and they can't continue this downward trend, it makes sense that cumulative delta might turn around, and that almost is like a slingshot, right? Or an accelerator.
Exactly. So yeah, I mean, that to me is, in a nutshell, the way I look at it. I mean, I keep it super simple, because once you have your boxed in areas, it's all comes down to what's happening in RSI cumulative delta. Now, you guys all know that I've done anchored VWAP stuff. You can throw that in there as well. I don't personally use the anchored VWAP as much as I do on a sideways market. Like when I know it's just rotating, then I will use that anchored VWAP. Well, I mean, really, I should say I don't use it as much in crude oil or like a gold as much because they tend to rotate more. They'll have a lot more mean reversion because it just commodities tend to do that versus like the S&P. The S&P volume is so, I would say, I don't want to say it's so much more important, but the way that the S&P and NASDAQ volume are in indexes, I think it has a stronger, it's stronger in my strategy versus it is in the commodities. Because the commodities, when I think that they're sideways, I don't, that anchored VWAP isn't as matters as much to me as the cumulative delta almost takes the place of that anchored VWAP for me. Not entirely. It's always situational. I love to say that I have everything as checked off black and white. There's a lot of gray areas in trading, but I like cumulative delta when I'm looking at commodities a little bit more than I would use the VWAP because of the reasons that I said. And I think that it shows me a lot when I see these boxed in areas, like right now in gold is kind of another market I'm looking at this a lot in, and oil. If I think that these markets are going to be, either sideways, gold is broken quite a bit today, but I really like cumulative delta versus the Bollinger Bands. That's it. But you had any other confirmations that you like?
Yeah, exactly. I think, it makes sense about the VWAP, right? When we're kind of consolidating, you'll see a lot of times market goes above and below VWAP, and it really acts as, like you say, rotation or a pivot. Whereas, on a trending day, we like to see where we might use those bands as resistance and support.
And just the S&P 500 volume and NASDAQ volume, the way that they come in with volume at price, and there's so many tentacles, other areas that I feel like I always have to have a VWAP up when I'm looking at S&P, Dow, and NASDAQ and Russell. But when I'm looking at commodities, if they're trending, I always have it up. But if they're sideways, I tend to be like, oh, I'm buying at the VWAP because it's at the 50% line, and all of a sudden I'm long and I'm just getting blasted. And versus just watching the order flow at my areas, it kind of trims it down and makes it better for me.
I like it. And thanks for that. I think we can just jump right into the question of the week because it is related to what we just spoke about. This week's question, by the way, if you want to send a question to Anthony, you can do so on Twitter. Just put in the hashtag AskDYE, develop your edge, AskDYE, and make sure you tag NinjaTrader at NinjaTrader and be following NinjaTrader, because if we pick your question, you're located in the United States, we will send you a nice thank you gift. Today's question comes from Day Trading Zoo. And Day Trading Zoo says, you might see it on your screen, do you prefer to use Bollinger Bands as a mean reversion tool, long on the lower Bollinger Bands, for instance, or strong continuation, long on the upper Bollinger Bands, as an example?
Well, actually ask the question again, Tom, because I want to make sure that I get this right. I'm sorry about this.
So, Bollinger Bands, do you use them as a mean reversion tool or as a strong continuation, like in a trend?
Yeah. So the Bollinger Bands, for me, they represent both, but they're more of a mean reversion tool when you look at what we talked about today with the boxed in. My number one issue as a trader was when volatility is expanding, when range is expanding, I would step in too early to fade that range, or I wouldn't be willing to go with that expansion. So what Bollinger Bands do in terms of trend is they help me realize that as long as the Bollinger Band mouth is still open and we continue to go in a direction, then I feel confident to use it as a trend indicator because we're expanding volatility, prices moving higher or lower, we're going with it. Now, as a mean reversion tool, like I showed you today, I like it a lot for my day trading because once that Bollinger Band comes in on a 3-minute, and I know it's boxed in on a 60, and I know it's boxed in on a daily, it helps me realize that we can trade both sides of the market. When you look at futures trading, one of the beauties of it is it's easy to get short as it is to get long. And so I like two-way markets. So when I use Bollinger Bands, it helps me see that mean reversion, right? And so I think I explained how I use it actually in both sides. But if I were to say, if I had to choose, I would use Bollinger Bands for the mean reversion because I execute more on that.
Awesome. Thanks for that answer, and thanks for that question, Day Trading Zoo. I think we have a little bit more business to do, Anthony.
Yeah, I mean, last thing I just want to show everybody is look at micro WTI crude oil. I'm glad I was able to trade and show you guys a live setup today. I'm glad it happened in a 30 minutes. You never know if you're going to get them. And, like I said, everything I do is with purpose, right? And so when I'm trading and I look at things, I don't just want to go in and trade and make live trades just to show something. But today actually worked out very well, and it shows you hopefully how I work the order and do different things like that. And I think that the micros, what's great about them is that you actually can help work on your execution. You can work on your execution with the help of micros. It's an inexpensive market. It might be expensive to some, so I shouldn't say that, but it's less expensive than the bigger product. And you can come in and you can work the offer. You can work the bid. You can scale in with micros. And if you want to learn how to trade like a crude oil or a gold or, all the other micros that they have, silver, euro, especially like we talked about today with micro crude oil, before you get into that market, I think you have to develop what I talked about, rhythm. And the micro crude oil is a great product. And micro products in general are a great product.
Awesome. Thanks for that, Anthony. It's great to see you. I was on holiday for a week and was letting Mike take over. What's that?
And now I'm gone. I'm gone for 2 weeks. I won't be back for 3 weeks.
Exactly. That was my next point, right? We're going to be on a little bit of a hiatus. Without Anthony, there is no show. So for 2 weeks, we'll be on hiatus. And in 3 weeks, we'll be back with Anthony. I'm sure it'll be a great topic, as he'll have 2 weeks to think about it.
2 weeks.
The best thing to start the summer. So
yeah,
always a good time to talk to you, Anthony. And I'm, proud to be a part of this show. Hope you have a good 2 weeks off. Are you doing anything special?
I will be headed to Atlantic City, so that'll be fun. I'm gonna be playing some golf up on the East Coast and Upper East Coast, so that'll be fun. But yeah, a little gambling with the boys, some golf, time off for the 4th of July, and once again, everybody in the U.S., happy Independence Day. I love the 4th of July, and I'll also be celebrating my birthday during that week. So a lot going on. It'll be I need the time off.
Happy birthday, happy 30th to you, and we will be back here in 3 weeks. For those of you viewing, thanks for coming and thanks for your participation. Today is Thursday, so Mike Burke will be finishing off the day with bars closing. In the meantime, have a great trading day.
See you.